Welcome to my channel. I'm Scott. In this video, I'm going to walk you through the process of valuing Fiserv stock by analyzing their financial statement and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 96 billion market cap. They're trading at 167 a share and they have 576 million shares outstanding. Fiserv offers payments and financial services. They offer mobile payment services, security, and fraud protection. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Pretty good free cash flow growth from 2.9 billion to 3.8 billion. It grows each year. Solid margins between 18 and 20%. Net income is the profit or loss on the income statement. It's revenue minus expenses. That grows a lot from 1.4 billion to 3.5 billion. The biggest jump was from 21 to 22. It grew 84%. Revenue is a sales for the company, and that goes up each year from 16 billion to 20 billion. Pretty modest revenue growth. Much more aggressive net income and free cash flow growth. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 91 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $82 billion. We divide that by 576 million shares. And we get a calculated stock price of 143. They're trading at 167, so they're trading at a 17% premium. It's a sell according to the model. Do you think it's a buy or sell? Let me know in the comments. There are 59 companies in the same industry as Fiserv, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend the most in CapEx, 1.5 billion. I don't know if that's such a great thing. It's good to invest in the future, as long as the investment pays off. Their debt to equity ratio is equal to the average, 0.9. They don't pay a dividend. They generate a lot of free cash flow relative to the median average, but a lot less than IBM. They rank third in market cap, about half of IBM. They're trading at 3.5 times book value, which is between the median and average. Price to book is stock price over book value per share. 27 times earnings, a little worse than the median, better than the average. They're trading at 25 times free cash flow, a little better than the average, and 5 times revenue, which is worse than the median average. They generate 20 billion of revenue, 30% of Accenture or IBM. The reason their stock price is going up so much is their 5-year annual revenue growth rate is 27%. So they've been growing their revenue a lot the past few years. Here's their income statement for the second quarter. Revenue 5.1 billion, up from 4.8 billion. Most of their revenue is processing and services, 4.1 billion, a little less than 1 billion in product. It's up in both categories. Really good margins in processing and services. Of the 4.1 billion of revenue, they spent 1.3 billion on expenses. So the remaining 2.8 billion is profit. Their margins in product is not nearly as good. SG&A, which includes marketing, 1.7 billion, total expenses 3.7 billion. Operating income 1.4 billion, up from 1.1 billion. Net income 900 million, that's up from 700 million. EPS of $1.53. They're buying back a lot of stock. They had 615 million shares last year, now it's 583 million. To summarize, I have them trading at a 17% premium. Their ranking is 8 out of 10. They're a really hot stock. Would I buy at 5 out of 10? I think it's overvalued. I'd like to see a pullback. But who knows if that pullback's going to happen. Ratio is a little weak, 4 out of 10. Financials look good, 7 out of 10. They're growing their revenue and free cash flow each year. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.